Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun going over charts. I like the chart behind me, which is of Applied Digital, ticker symbol APLD. And so I wanted to do a follow-up on the video that I did about a month ago, maybe sometime around then. I'll put a link in the description of this video as well as at the end if you're curious about that. But really, I think that we've done a 50% retracement here. And so I will go over that. And yeah, this is really just following up on the Bronx Vikings post from July 31st that Applied Digital could be going to 30 plus before the year is over. And so I just retweeted that. He did have a few tweets that followed up on this in August, but for the past few weeks, it's been kind of silent. And so I just wanted to share that, I got an alert on Applied Digital yesterday, and it looks like it could be bottoming after bearish divergence, which I'll go over, and, then waiting, a month plus for the retracement. And so it might be a good opportunity now that we've gotten bored of it and forgotten about it, because the market does tend to do that. And so, yeah, I am over here on X as well as the Bronx Vikings. So, follow us if you guys would like. But yeah, I'm just going to go over the chart here. And so the number one thing that we can see before I throw up drawings that were in the last video, then I will edit them, is that we can see the 50-day simple moving average here in blue. That is just below us at $12.86. We did hit a low yesterday on September 8th at a price of $13.16, and I believe that's a 50% retracement. It does also look like that could be a bottoming signal there with like a dragonfly doji, big wick to the downside. And while it's not that impressive, volume did step up a little bit. They're suggesting that buyers are stepping in, that, sub 14 is going to be the floor. And talking about $14, that does seem like it's going to be a pretty significant level, because if I go over to unusual whales here, type in Applied Digital to look at the max pains, we can see that for the next, let's see, 1, 2, 3, 4, 5 Fridays, expirations for options, max pain is $14, and currently it's trading at around $14.23, so above max pain. Maybe we're getting into gamma squeeze territory with that. But yeah, looking at the chart over here, I'm just going to take a step back and throw up the drawings that I had from the last video. And so I'm going to delete a couple things here first just to remove some of the clutter. One of those things, actually that's two of those things that I had drawn up before, was these scenarios of potentially Applied Digital moving up and then testing this line, which I'll go over in a second, as support before going higher. That didn't happen, so I'm going to delete that. And this other line over here is kind of playing out, but just a little bit more delayed. So if I were to, move this over here, that does seem kind of like what is happening, this retracement, bouncing up, maybe getting above that line later. But, just to remove the clutter, I'm going to get that off the chart. And I will go over these extensions in a minute, but let's just bring it back down to here to look at this Fibonacci retracement. And so we can see that goes from the low here from July 11th, which was the low following this retracement. And then that goes up to right over here, 1691, somewhere around there. That was the high from August 18th, high of 1692 on that day. But as you can see, we did go a little bit higher. So I'm just going to move that. Let's see, I locked it into place. So I'm just going to move that up to here. And actually, I could just keep it extended further into the future so we can see those levels that they might be getting retested. And so over here, like I said, that low was, actually, I don't know if I mentioned the low, that was at a price of $9.02, and then the high over here, $17.60. So let's just make sure those levels are correct, pinpointed to the penny there. And we can see that, yes, like I was mentioning, the 50% retracement level at 1331, that's the alert that I had. I have my alerts in Webull, but here looking at TradingView, we can see that is consistent with the 50% retracement there. And so why did I have that alerted? Why did I want to be alerted when we got that retracement? Well, that's because of this bearish divergence. I don't know if you guys can see it, but we do have higher highs in the stock price going back to August 18th. We continued to put in higher highs after that. And so with that, to not see divergence, we want to see the RSI putting in higher highs as well. But we don't see that. We do see that the RSI back here, when we were hitting the highs, it was, in the 80s, the RSI over there. And then as we're putting in new highs, the RSI was actually putting in lower highs. So that's bearish divergence. I would expect a retracement following that. Everybody's getting excited about that. Let's see, on July 31st, when was that? That was when, the Bronx Viking was posting about breakout from this downtrending white line. Everybody's getting excited about it. It runs for a few weeks. And then after that, people are like, oh, we're going to break out, putting in new highs relative to this one as well as relative to this one. So everybody's getting super excited. But what we see is, not so great as we are putting in new highs here in this time frame. That volume is actually diminishing. So we see lots of volume over here pushing up. And then as we get back up to that level and to put in new highs, we see lower highs in the volume, just like the RSI. So that's effectively like bearish divergence. We're not seeing, the large effort in pushing this higher. There's not the energy needed to push this up and maintain it higher. That's actually diminishing. But what we can do now is, if I just scroll this over so I'm not blocking anything, what we can see is this trend line, we've broken above it a little bit, but came back down. And so what we want to see is volume really push out up here and start to put in new highs. So here we had a volume of, let's see, about 40 million shares traded on that day, June 2nd. Over here, 138 million shares traded on July 31st. And then over here, about 70.6 million shares on August 18th. And so what we want to see is like a million shares traded on one day, starting to see that push into higher highs with the volume. And then maybe we start to take off. And yeah, I think that this looks really good, but maybe what we're starting to see is, this bottom beginning to form. But since we did gap up today on September 9th, so I'm recording this on Tuesday, market's been open about 23 minutes now as I'm recording this. And so we gapped up opening at a price of $14.77. High so far on the day is $14.83, but we are pulling back. We're now below that $3.82, below $14.32, trading at $14.20, now $24. And so we do have this gap here. And so kind of, what I'm wondering is maybe this gap gets filled and then we start to go higher. And so filling that gap would be returning to the close from September 8th, and that was at a price of $13.91. So just dipping below $14, and then maybe we could start to rally following that, maybe getting back up to these prior highs around $17. And if we're starting to close on Fridays well above 14 in increments of 50 cents. That's how options contracts work. That would be closing strikes above max pain, and that could trigger a gamma squeeze or gamma ramp, especially considering that max pains for the upcoming weeks are $14 or, even lower than that as we get into the October monthlies on October 17th. So yeah, I could see this really start to take off to the upside. And then just looking at some of the data from Unusual Whales, I did just a quick little search of the flow to see if there were some contracts that stood out. So I might just do this again here in case. Yep, so we got another bigger order. I have this filtered by a minimum premium of $100,000. And so what I had previously pulled up was from yesterday, September 8th. That was a call with a $10 strike that expires in January of 2027. And that did seem bearish because this was placed on the bid side. However, if we do open up that contract, and I might actually have Ed step out of the way for this so he's not blocking it. If we do just go back one day in time, so looking at the September 8th data, what we can see is this spike, this candle right here. Let's see, that candle volume represented 200 contracts with an average fill of $6.55, a 655 times 100, $655 per one of those contracts. And what we can see on the 8th over here is there was a volume of 410 of these contracts. And you would think that that's bearish because of what we were seeing in the table of the flow. But what we actually saw was open interest increased from 5,790 contracts up 255 contracts. And so this candle volume was 200. So you could think that, all of that was probably actually buying because we saw the open interest going up by 255 contracts. And so going from open interest of 5,790 up to over 6,000. So that does seem to be bullish. So that does seem pretty good to me. But then coming back to the flow data, we can see that so far for September 9th, in the first 22 minutes of the market being open at 9:52:20, it looks like there was a pretty big order, again, premium above 100,000. And that is for the $15 call that expires again in January of 2027. So if I open that up, we can see this pretty massive candle here that's representing 316 contracts at an average fill of $4.90, so about $500 to buy one of those contracts. And we can see, while we don't have the data from today because the day is not over yet, we'll get that in the morning tomorrow. But what we can see is that so far volume is 448 contracts being traded. 316, like I said, for this candle, that does suggest buying. It does suggest, that this is bullish. And we have been seeing increases in this contract. $15 is out of the money currently with price trading, as you can see here, below 15. So that is bullish. That does suggest that Applied Digital is likely to go higher. And that's with the backing of, hundreds of thousands of dollars. So not millions, but still, a lot of money there. And then also just looking over some of these contracts I have up on the list, one that, I'm interested in, but personally, I don't hold any Applied Digital, whether shares or contracts. I had previously held this one, $30 strike call that expires in January of 2026, so about 129 days between now and expiration. And that's really just kind of inspired by this tweet from the Bronx Viking. If Applied Digital could be above 30 by the year ending, then a $30 strike call expiring in January makes sense. It seems kind of like a safe bet. And so let's see. I'm not really going to, spend too much time on this. I guess maybe I'll just go back, a day so we can see. Yeah, don't really want to spend too much time on this. It's not necessarily the most sexy of contracts as far as like big money. They're going to be looking further out into the future and closer to the current price. Looking at over the past 30 days, we can see that from, when Bronx put out this post on July 30th. We can look at, I'm actually just going to expand this here, go back 30 days so we can see all of that. So on July 31st, I think I said 30th, but I meant 31st. Yeah. Let's see over here. On July 31st, we can see the yellow, that is the stock price, that was going up a bunch following that. But then we have since seen this retracement dip in the stock price, but now it's starting to go up. So maybe that is the beginning of it starting to break out. As far as premium goes, that's going to be the green, which is net call premium, the red net put premium. While we did see net call premium spike up to, let's see, over $7 million, it looks like $7.4 million on July 31st, we haven't since then seen call premium, net call premium, or net put premium being that far out, being that high up or that down low. And so what I think would be really interesting is if we really start to see the net call and put premium pick up. And that would suggest that, a big move is imminent. And maybe we're starting to see that so far on the day of September 9th. It's really just started, but so far we've seen net call premium increase by nearly $500,000, whereas net put premium is effectively flat at around $5,000. And if we do look down over here, if I just scroll down, we can see that the bear and bull slider here is about 59% on the bullish side. And that does make sense with the net call premium being up here. And just to note, since it is up on the screen, if you do want to track more of this data, Unusual Whales is having a back to school sale right now. You can get 15% off of platform plans for up to a year. And that goes until tomorrow. So make sure if you're interested in Unusual Whales, great time to get it. I'm not getting paid to say that. I just like their tools that they offer, so I just wanted to share. But yeah, now looking at this chart, we did dip down below the 382 as I was talking about before. Now we're currently trading at 1450. That is a strike. Effectively a strike now, 1448 above $14, which is the max pain for this Friday. So yeah, I think that this could really be taken off, getting back to this trend line around 1750, potentially breaking out, maybe getting to 30 by the end of the year. So I think this is pretty exciting. I wish I held some, but I just got to manage that. And I'm excited about the chart. I wanted to share it with you guys. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot and have a great Tuesday trading. I'll see you in the next one. Take care, guys.